Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 18th, 2010. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY, and we were targeting a measured move on the upside of that 115, 116 area, and that did cap off the upside of last week. I drew a blue line representing the bottoms of last week's trade range-bound week, and any technical breakdown early this week below those lows will open the window for a market consolidation that should at minimum be retesting that 111 to 112 area. In the bigger picture, if we see a market top coming off of this level, the only way to truly confirm that will be a break below this 108 to 109 level on the downside. Reality is that anything that just consolidates down to the 111, 112, we certainly still can't rule out the possibility that it bases there and thrusts again back to the upside. We need to see a bigger picture market consolidation for there to be a more of a bearish tone to that. When we take a look at the ISE Regional Banks Index, which is a symbol JLO, last week we identified the 22.5 to 23 focal point above as the overhead resistance. Thursday we had a test of that area and this reversal candle coming in there. At some stage here, if the market itself, as a broader market, continues to rally, we could see a push all the way as high as the $24 area on the upside. But if the S&P starts to consolidate here, this 22.5 to 23 will probably mark a swing high for the regional banks. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is the index of all the casino tobacco distiller companies. We had the upside overhead resistance levels up at the 112 to 114 area. We're having the reversals coming off of the last swing high around that 110 area. This is a very short-term resistance. The target on the upside still measures for a potential retest of that 112 to 114. But again, if the broader markets have a technical breakdown here, then this 110 may contain this swing before we get into some sort of consolidation. Next here, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. We identified the 1050, 1075 overhead support resistance level, which has now contained all of last week's trading. At this point, this may be still a flagging formation that could turn bullish, so any technical breakouts above 1050 opens that window for a retest of the September highs up around the 1150 area. But so long as the broader market digs in, that's certainly a consideration. But if we see a broader market a breakdown and see a deeper retracement, then we also could see the home builders come back and retest some of the retracement zones around the $9.50 to $10 area on the downside. But there's nothing outright bearish yet about this big reversal we've seen in the home builders. Next here, I want to take a look at the ISE Natural Gas Index, which is the symbol FUM, and we've seen a lot of strength in this index relative to the broader markets, except the last week we've seen a couple failed breakout attempts to what's now the 113, 115 focal point. Still, the window is open for a further break higher, so we're going to be watching that 115 area because any technical break above there opens the window for the finished move all the way up to 123 to 125 on the upside. But if we at the same regards see no technical strength here, then we could see a retracement come down in as low as the 102 to 107 area on the downside into the retracement zones. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and we've seen a rally that pushed up toward the 560 to 565 target on the upside. Now in the last 4 days, we've seen a consolidation after a reversal on the downside. Any technical breakdowns below this 545 level opens the window for another $5 to $10 drop right into that congestion zone around the 535 to 540 area on the downside. But so long as all the selling is contained into those zones, we certainly can't rule out the possibility of it actually making another push higher. It would take a much deeper market correction for us to have a bearish tone, which would mean we would have to break the 535 level on the downside and then see a market that over the next few weeks breaks all the way down to the 515 to 520 area. If we saw technical damage down to that zone, then we would start looking for what could be a considerable topping formation for a multi-month correction. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.